I want to talk to you today about what's going on at PacWest and this whole banking crisis. We're going to talk about some other things too, but you've been paying attention. You know something smells funny. Do you really think all this is over? I mean, we've had the second, third, and fourth biggest bank failures in American history. And PacWest, I believe that would be the fifth biggest. So you tell me 2, 3, 4, and 5, but everything's fine. Everything's fine. Really? Is that really what you feel in your gut? I got a good article to go over with you here today. It's about PacWest, everything. I'm going to go over some real numbers. But listen, you hear Janet Yellen, you hear Jerome Powell, and you're just thinking, and you hear everyone talking, you hear Biden and everything like that, and you're like, this doesn't add up. And then you see these numbers come out, you see inflation, you go into the store, you've seen the things you regularly buy go up a ton, and you're kind of like, what's going on here? How can we really keep up with this? This is crazy. So in terms of banking crisis stuff, let me tell you about PacWest here. We got an article here. Stick with me on this. You're going to really want to hear this. So it's titled, PacWest shares tumble 20% after regional bank says deposits fell 9.5% last week. Did you catch that? Did you catch that? Deposits fell 9.5% in 1 week. So that means if they have $1 billion in deposits, they just lost $95 million. And they have more than $1 billion. As a matter of fact, we'll get to that. We'll get to the exact amounts. Let's get started here. So shares of PacWest were under pressure once again Thursday after the struggling regional bank said that deposit outflows resumed in the first week of May. Deposit outflows resumed in the first week in May. Are you kidding me? Everything's fine, guys. Everything's fine. Go back to your spending money, taking out credit. Everything's fine. Everything's fine. The stock was down 23%, further extending its recent declines. Entering the day, PacWest shares had already fallen 40% this month, and more than, wait for this, 70% for the year. I have a interactive stock chart here. On March 1st, on March 2nd actually, it was $27.64. Guess what the stock price is today? May 11th, $4.50. Everything's fine. Everything's fine. The bank said in a securities filing Thursday that its deposits declined 9.5% during the week of May 5. So that was last week. PacWest said that the majority of those outflows came after media reports that said the lender was exploring strategic options. Don't you just love that? Don't you just love how they put this spin? They try to make this nomenclature. We're exploring strategic options. Oh, and everything's fine. Yeah, that doesn't sound like trying to spin like we're in trouble and we're looking for a way out. No, we can't call it that, guys. We can't call it that. We'll call it exploring strategic options. I like that. Let's say that. The bank also said that it was able to fund those withdrawals with available liquidity. So it was able to meet the outflows. Wonderful. How long can you do that? How long can you keep up with that? PacWest said that it now has $15 billion of available liquidity. Wait for this. $15 billion of available liquidity compared with $5.2 billion in uninsured deposits. Uninsured deposits, $5.2 billion. Wait a minute, let's do some math here. Your uninsured deposits, super. So what are uninsured deposits? They are the money holding in the bank that is above the $250,000 mark, right? So every account that has money deposited in the bank is FDIC insured up to $250,000. You know this. Every bank you've ever walked into, you see stamped all over the place in gold plating, the teller window, at the door, every single where, what the FDIC insurance is. So the uninsured is the money in any account that is above $250,000. So the real question here is, okay, you got $5.2 billion in uninsured deposits. Seagulls are going crazy. Well, what's your total deposits, right? Because if you're going to fail, okay, super. FDIC is going to cover the $250,000 per account. So yes, looks like depositors at the moment are safe, right? Safe. But if they have how do I put this? Again, we need to know what their total deposit is, right? If they got 15 billion in available liquidity, but they have 30 billion in deposits and 5.2 billion are uninsured. So 5.2 billion are uninsured. Okay, again, we need to know what the total deposits are. This to me smells like failure. That's what it smells like. The update marks a change from May 4th, May the 4th be with you, when PacWest said it was not experiencing out of the ordinary deposit flows, and that total deposits had increased since the end of March. Smelling something else. Comes out of a bull, rhymes with mitt, right? So out of the ordinary deposit flows, haven't experienced, sure you haven't, bud, and total deposits had increased since the end of March, sure it has. During the first quarter, PacWest total deposits declined 16.9%. 16.9%. If you're not familiar with the state of fractionalized banking, which is where banks don't need to have all your money, right? As a matter of fact, they need to have zero. The government, the Federal Reserve, they lowered the minimum money held at the bank to zero years ago, and they have not raised it back up yet. So guess what the banks have done with the money? Trying to get all kinds of yield, right? Trying to get all kinds of return, just YOLO, just having terrible risk management. That's why we're experiencing what we're experiencing now. Their total deposits declined 16.9%. They can't keep that up. If they survive this, I will be shocked. But let's continue. And the bank said it would use, I love the spin, strategic asset sales to reshape its balance sheet. I just love corporate speak. Strategic asset sales, liquidation, selling shit to try to pay their bills, and reshape its balance sheet. What a spin. Don't you love the spin, right? Reshape its balance sheet. In other words, just liquidate and sell shit and try to stay alive. Several Wall Street analysts theorize that the most recent outflows from PacWest venture capital customers. They were from PacWest venture capital customers. So these are some of probably their biggest depositors. And you know what? Birds of a feather flock together. So if some of them are pulling their money out, I don't see that changing. I don't see venture capitalists coming in saying, well, PacWest, we think you're good now. Now we're going to deposit money. I just don't see that happening. What about you? Leave a comment. While the deposit news is not what the company wants to report, if the outflows are truly from the venture depositors and not the core bank, that is better news despite the higher total outflow disclosure. Maybe. The financial result is that the company is borrowing more to replace those deposits. They're borrowing more to try to stay alive. They're on credit cards right now, roughly. RBC Capital Markets analyst John Arthro said in a note to clients, so that's what he said. So listen, following PacWest filing, Western Alliance released its own update and said that the total deposits have grown by 600 million since May 2nd. Really? Is that right, Western Alliance? Another bank on the brink. Shares of that bank were up slightly on Thursday. Elsewhere, shares of Zion, SPDR regional banks, that ETF, they were down, looks like 3.5% for Zion and 1.4% for that ETF. Now listen, why does all this matter? You don't bank at these banks because when the Fed is tightening interest rates, when what that does is that affects liquidity, that affects credit, that affects the ability to borrow, and that's the thing that really keeps the economy going and moving, keeps the engine running. When the banks tighten, and the banks have been tightening, and this type of thing right here shows why the banks are tightening and why they will continue to tighten, and they're going to hold on to their purse strings until they really think it's safe. because now it's a matter of survival. And what that happens, that means businesses, that means people cannot get access to credit, to capital, to keep the economic engine running. That's what a recession is. And if it gets bad enough, it's a depression. And that's why we lead to unemployment. If businesses can't get access to the capital that they need to keep running, which is not as simple as just simply making money on your product. I know that's the thing that we've moved into in this world, but the truth is most companies run on debt and continued lines of credit. If these things get tightened, which they have been getting tightened, and they seem to be getting tighter and tighter and tighter, eventually they got to shut their doors, or they got to shed expenses, which means laying off people. It's the last thing businesses want to do, but when push comes to shove, when it's survival, they got to start throwing stuff off the plane to try to get weight off, and they don't have much gas left in the engine, or else they're going to crash. If that makes sense. The regional bank sector has been under pressure since early March, when concern about the impact of higher interest rates led to a run on deposits at Silicon Valley Bank. You all know this, which is seized by regulators. Signature Bank soon followed, then First Republic was seized and sold to JP Morgan. Let me tell you something about JP Morgan. Wouldn't it be absolutely bonkers, crazy, out of this world if JP Morgan failed? You're thinking, that can't happen. No way. Derivatives. JP Morgan, from what I understand, JP Morgan has such a humongous short position on metals via derivatives that could absolutely crush them. Wouldn't that be something? Just something to think about, just something to keep in mind. Could it happen? I think the probabilities are low, but the things that happen, no one sees them coming. JP Morgan CEO Jamie Dimon told Bloomberg on Thursday news that he thinks regional banks are quite strong, but added, I think we have to assume there's a little bit more to the crisis. Yeah, he's just loving it because they're able to acquire all the assets in these banks, right? They took over First Republican. They were able to get all the good stuff, all the assets, and take on none of the liabilities, none of the junk. They got to pick through the rubble and salvage that stuff, and just put it right in their books. Just wild what's going on. And have you been seeing more people getting laid off? Have you been seeing, do you know anyone that's getting laid off? Leave a comment. Do you know anyone that's losing their job? Do you know? Are you seeing things in your life? Like, for instance, I've been telling this story, and it's just a placeholder example because I have many instances like this, but there's a coffee that I buy. It's not an expensive coffee. It's at Whole Foods, but it's not expensive. It's their brand, 365 brand. It's organic decaf. It's a 24-ounce bag. For years, it was $9.89. $9.89. Then 2 months ago, I go in there, la-da-da, and I'm like, it was all of a sudden $13.99. Holy, I was like, all right, whatever. And then I go in there about a week or so ago, and it's $15.99. So it went from $9.89, which it was for years, to $13.99 to $15.99 over the course of 2 months. Whew, that's over a 60% increase, ladies and gentlemen. My sister-in-law said that she went to Taco Bell the other day, and they used to have this cravings menu, and everything was $1, which tells me I don't eat there, so I'm just taking her word for it. I've had other people tell me about experiences like this also at other places. So she was saying, she goes, yeah, I went there to order a few things she normally orders, and the minimum of the things she used to order that were $1 were $4.99. Now I talked to my brother since, and he said, yeah, that cravings menu changed. Some things are $2.50 now. I'm like, that's still insane, right? To go from $1 to $2.50. But of the things that she orders, I guess the cheapest one was now $4.99 instead of $1. What in your life have you been experiencing? This cannot keep up. Housing is at the most historic unaffordability rate of all time. Okay? Housing affordability is the worst it has literally ever been since it's been tracked, which is many, many, many decades. How long can we keep this up? People are taking on more and more credit. Banks are failing, so credit is becoming tighter. Right? People are taking on more and more debt and credit just to maintain the lifestyle, just to keep going. People are even doing it buy now, pay later to get groceries. I saw a report that 42% of people that do buy now, pay later, 42% of the money from buy now, pay later goes towards groceries. This can't keep up, guys. This can't keep up. There's got to be some kind of reset, and it's not going to be pretty. It's not going to be pretty. So prepare yourself. I hope this helps you. Hit that subscribe button. I got more of this coming out. I'm going to keep doing more of this style. It's getting nice out. I like doing this outdoor stuff, maybe going over some reports to you, sharing myself. I'm going to start doing more of this. Let me know what you think. You're awesome.